If I would have hit everything I could have found. Uh-uh. But if they trade up to 23.75, won't you sell two for me? Yeah. Good morning, everyone. Sorry about the late start. All right, let's kick it off here. Actually, a hell of a busy day today. Yeah, I think that we've got some exciting days ahead of us over the very near term. Okay, let's jump into last night's action. The S&P. Obviously, we opened up lower and really drove lower for the better part of the day. Last 2 hours, we did see a bounce off of the lows of the day, which at one point were pretty steep. We still managed to finish down 175 points, over 1% on the Dow. I think that's important. It's the lowest close of the year to date so far for the Dow. You can see there every sector was down except for telecoms, which is obviously defensive. So, there's definitely a move out of certain risk assets yesterday and into certain defensives. We had treasuries, which really rallied yesterday. We had most of the risk on stocks were out of favor. All the risk on currencies got hammered. So we really saw some significant moves yesterday, and I mean, I would like to, maybe label yesterday as some sort of moving day. I think we'll be able to look back and see it as some sort of a start of an inflection point of some sort of circumstance. Now, we obviously we saw what it was also important was just the emerging market currencies got absolutely decimated yesterday, led by the peso in Argentina, which is down over 13%, I believe, yesterday against the U.S. dollar. We saw the Malawian kwacha yesterday get hit about 5%. Turkish lira got hammered almost 2%. We got hammered here locally, especially against the pound. I mean, it was just pure decimation. To that extent, it's starting to feel. I don't know if it's maybe a little bit of capitulation because we've seen these moves in the emerging market currency space for a while now. But we're going to have to continue to follow that to see if it continues to steamroll. All right, Asia this morning was down across the board outside of China. China just seems to do the opposite of everything else every single day. We got hammered on the Nikkei. Obviously, the yen showed quite a bit of strength against the dollar last night. We actually only finished down about 2% on the Nikkei, but the rest of the markets were relatively controlled. Nothing too hectic there, and really just kind of property stocks that led Shanghai higher overnight. All right. Today, more earnings out in the States. Last night we had Starbucks and Microsoft that were after the bell. We had Starbucks that missed on the revenue number. It was in line on the EPS number. And then we had Microsoft that was a beat on revenue and on the EPS number. So we continue today. We've got before the bell, we've got Procter & Gamble and Bristol Myers Squibb and Honeywell so far. What I would like to say is on earnings season so far in the States, just some of the notes that I've seen from what's the group FactSet. We've definitely we're looking at another quarter so far. We're seeing we're continuing to see some downward earnings revisions and reasonably lackluster earnings, less beats than the average. So this is that might be part of the reason why we start to finally get a little bit of a sell-off as well yesterday. All right, market data, pretty much nothing today. We've got Spanish PPI, and then we've got Italian retail sales, so total non-event on the data front. But we had, like I said, what I would call moving. We had more or less what I would call moving day yesterday on global equity markets, global financial markets, I should say. We just had so much that happened yesterday. I don't think that we can ignore that in any small scale. There's just too much that changed yesterday. There are too many significant moves for us not to take note. First thing I have a look at is Aussie the Aussie future, which yesterday, incredible. We're going to look at it on a 30-minute chart, and you can see there. We talked about this level and its importance yesterday, the 42,400 level, which we popped up above 3 days in a row now. In fact, today we just come back up to test it again right now after opening up a little bit lower than that. You can see how significant this level is, but we failed it 3 days in a row, and yesterday we were 300 points above this level, if I'm not mistaken, and we managed to fail it by the end of the day. So this is, to me, if we remain below this level today and start to pull back, I think that it's a monster failed attempt on a continuation. As a big reversal yesterday at the end of the day, and I would think that we could come significantly lower. Provided we stay below this level today at 42,400. All right. Next one we'll look at is the German DAX. German DAX pulling back to key support yesterday, right at 9,600. We literally touched that on the nose, bounced about 30 points above that. I'm not sure where the FTSE future is showing at the moment, but I would expect it maybe to be showing slightly down. And are close to these levels. If this level drops at 96, then this has been one of the leaders on the board as of late. You can just see how consistent this trend to the upside's been. Pullbacks have been very, very small, and along with the S&P. So we dropped this level of support 9600 in the German DAX. I think that's one of the leaders that's tipping its hat to us. So keep that in mind. Okay, we're going to look at a 2-year here on the gold chart, and what I wanted to just look at here is, let's just have a look. Sorry, it's a bit curved here at the top, but let's take this from here and just draw that line there. You can see that we've really broken out of this recent downtrend to an extent in the gold chart. I'll just zoom in on this last little part here. I actually saw a couple of the market professionals in the States last night talking about this chart as well. This is just one to monitor. I don't think that you can go outside and freaking start buying gold all of a sudden, but I think it's important that we're popping out of this downtrend. We kind of failed to really continue to drop out to the bottom side of that head and shoulders pattern that we had in the latter part of the year, and we've definitely popped up above the 1250 level, which was key, and above trend resistance here. So watch gold going forward. No one likes gold at the moment. Could be an incredible contrarian trade to get long, to end up making cash on some of on either physical or on some of the miners. And you can see how they ripped higher yesterday in the States, and obviously getting buoyed by the weak rand. All right, let's jump into some of the individual equities. We're going to look at Mr. Price. We're also going to look here at a 30-minute chart to Mr. Price. I think we tweeted this one yesterday. The key thing here was really the drop of what we had this big downdraft, this 2-day downdraft, which I think really showed its hand, along with the retail sector, showed their hand that there are significant problems here. We're going to continue to get direction. Remember, when these things put in these massive red bars like that, typically that lasts for an extended period of time. A couple things that stick out to me here. We've got, if you run this thing from the fib retracements, we basically topped out around 50% high fib retracement, and then also we dropped the little flag pattern that we started to set up over the last couple sessions, looking more or less like a dead cat bounce. Yesterday was a really ugly finish there in Mr. Price, and I think especially if we drop out of to a new closing low below 48.60, that the floor could possibly fall out on what's been the strongest retail stock for a long time now. All right, Tiger Brands. Tiger Brands had a huge rally the last 2 days on the back of a UBS upgrade to a buy. But if we look at this over the last 2 years, it's been one of the weaker stocks on the board, especially in the space. We had a huge pullback here from 310 to 250 Rand in a matter of 3 weeks. And what you can see here is, let's just run this thing from the close. You can see we pulled back to close basically right at 280, which is a total fail. It was trading north of 284 on yesterday afternoon. And the fact that we failed to really break out there, to me, is significant. It further cements this level. Also, just from that recent little top to bottom level, we also kind of failing at about 50%, between 50 and 60% fib retracements, which I think is significant. So what I like to see is a bit of a reversal day today, and then I think we could, this thing could definitely be a revert back to one of the more bearish stocks again that we've seen on the market. All right, we're going to look at Sasol real quick. Sasol was one of our favorites only literally probably a week ago. When we broke out here from 520, we were all over this one. We talked about the target on the stock being 560. We basically had the pullback from when we pushed up to 520 all the way back to 480, 40 Rand pullback. We get to 520, we break out to the upside. Our projection's 40 Rand to the upside. We touched it on the nose at 560 yesterday. I think around those levels, maybe if you're looking for a short-term play, maybe not a bad place to fade. Still love it. The pattern's still incredibly bullish, but it's due for a pullback. It's incredibly overbought. You can see down here on the bottom on the RSI, absolutely through the roof. We've moved 10% in a matter of 5 days. So just keep that in mind. Maybe due for a little bit of a pullback on one of the more bullish stocks there. Obviously, it benefits more from the weak Rand than anything else. All right, we're going to look at Naspers on a 30-day. Naspers had a really weak finish yesterday, and it got hammered overnight. And in Hong Kong, not hammered, but it was down. It was down 2.5%. Tencent was down 2.5%, which obviously it's major holding. I'm expecting this thing to drop 11.50. I think we closed 11.50.20 or something like that yesterday. And if we drop 11.50 today in Naspers, I fully expect this thing to pull back and retest where we broke out from and fully gap fill this 11.20 level, which would take us down, to some sort of support. I mean, this thing hasn't retested support in ages. It's basically moved 20% or 200 Rand in a straight line. And I think it's due to pull back to support. I know a lot of the internet stocks in China got hammered yesterday on news, so just keep that in mind. A pullback to 11.20, it could happen as quickly as today, but there's support there at 11.20, so watch that level if we get down into it in Naspers. All right, and then the last one we're going to look at Anglos, which we've been looking at a lot as of late. And what we're going to look at here is really notice there on the right, there's 2 days where we wicked up and failed right at the same level at this 256, 257, somewhere in that area, 56 and a half, whatever it is. But we failed it again yesterday intraday. We still did manage to put in a recent closing high, but I think it cements the importance of this level nonetheless. So keep that in mind. If you guys see this thing pop over 257 and can stay there for more than a few minutes, that's going to be really important. That will be a breakout. That level is very important now. If he gets back up there and fails it again, it's probably a great level to short it off of, and it might be a decent short this morning at the right price due to the fact that we did fail it again yesterday. So just keep that in mind. That's an important level there in Anglos. And that's it for today, guys. Thanks a lot.